Hello everybody and welcome along to today's webinar. And firstly, happy National Payroll Week to everyone. I hope you're having a wonderful week. So today's subject is going to be getting to know pensions, and it is part 2 of a 3-webinar special this week, culminating in our big quiz tomorrow. My name's Calvin and I will be your host and presenter today. And I'm joined by a crack team of payroll experts in the background in the form of Tim, Ollie and Duncan, who will be on hand to answer any questions that you may have throughout the session today. So let's get into the nitty-gritty of today's session, and we'll look at the contents first and foremost. So we're going to have a look at setting up and assigning a pension scheme. So how you would set up a pension scheme and then assign that scheme to your employees. We are going to be running a product demo of this, but we're going to be focusing mainly on assigning it manually. So for those of you who have got the pension module, it is slightly different, but we do have a pension module webinar available in our recordings section. So I'll show you where to go at the end to find that, but we will touch on it with a couple of screenshots as well. But for the product, we're going to focus on the manual process. And the same goes for the next section, which is going to be opting in and opting out requests. So how would you process both either opting in and opting out requests from your employees when it comes to pensions? Then we're going to have a look at calculations. So how is a pension calculated and what settings in the pension scheme setup at the first part will impact the calculation, which is very useful to know if you're ever unsure about a contribution amount for an employee. You'll be able to check not only the calculation itself, but the settings in the program as well. So very good for troubleshooting any particular problems. And then finally, we will finish off with some further support. And as I mentioned, we'll spend a little bit of time at the end going through any remaining questions that you may have. So let's get into the first section, and that is setting up and assigning a pension scheme. So to do this, you'll need to go to your pension scheme settings, which again, we'll jump in the program. I'll show you where that is. But the pension scheme settings is going to determine how it's calculated. So I mentioned it's important for the calculations later down the line. And this is a couple of screenshots there. So you'll notice on the left-hand side, we have our pension scheme, but you also have pension scheme 2 all the way through to 10. Now, these are just standard default schemes that when you're setting up a new scheme, you would just simply overwrite by clicking on the edit button. And then on the right-hand side, you have the various different tabs that we will go through in that demonstration. So when it comes to assigning that scheme, once you've set that scheme up, you will then need to assign the scheme to your employees. Now to do this, you'll need to assess your employees. So again, those of you with the pension module, that will be doing the assessing for you. But this will determine whether your employees are eligible, non-eligible, or entitled. And it's those eligible employees that must then be enrolled. So you must assign that scheme to any of those that are eligible. Now, a screenshot on the right hand side is the legislation settings within the program. And again, I'll show you where this is. It's very useful for when you're manually assessing your employees to get a hold of the earnings trigger there, as well as the earliest assessment age. So remembering it goes on age and wage. As well as the upper and lower thresholds. But for the assessment, it's just the age and the wage. So it's that earnings trigger there. So £10,000 annually, and anyone over the age of 16 or 22 to be eligible. So 16 would be non-eligible, or eligibility age is 22. Okay, so that is assessing. Once you've done this, you'll be assigning that through the employee record. So this is where we're going to jump into the demonstration and show you. So once you've assessed your employees, either through the pension assessment, but the pension assessment will, of course, assign the pension scheme manually for you. Not manually, it will do it automatically for you. That's the whole point of the pension module. But we'll be doing it manually. So you'll be coming into the employee record and hitting on the pensions tab. Now, I did mention I would touch upon the pension module and the pension assessment. So we've got a quick screenshot here. And when you run that pension assessment, it will assess your employees. So we've highlighted one there who is eligible. And as you'll see, they have been auto-enrolled and the pension scheme has been assigned. Okay, so when you run that pension assessment, it will automatically assign the scheme to any employees that it deems to be eligible. So again, this does it all for you. So it skips this whole process out. That's only for those of you who have subscribed to the pension module. But what I'm going to do now is let's jump into the program and we'll show you all those settings and we'll show you how to assign a pension scheme manually. So here we are in Sage 50 Cloud Payroll. The first place I need to go is go and set up our pension scheme. So we're going to click on Company in the bottom left here. Then we're going to go into Pension Schemes, which is in the top left. This will bring up that window we saw earlier in the screenshot where you've got all the default schemes as well as our company pension scheme. And what I'll do is I'll just edit our company pension scheme to show you this one, almost Blue Peter style of here's one I made earlier. And here we have those various different tabs. So the first page is your details screen. So this is where you'll give your pension scheme a description. That can be up to yourself on that one. So we've named ours company pension scheme. You will need to select the type of pension scheme it has. Now, when it comes to the type and a lot of the information that you have in this particular window, you will need to obtain from your pension provider. So it will only be your pension provider who can give you the accurate information to pop into this screen, okay? So that includes the type. It is a qualifying scheme if it's your workplace pension scheme. So if this is the scheme that is under your workplace pension, then you'll be ticking the box for qualifying scheme. Any other schemes, such as a private pension that you may have set up, or a director may have their own pension scheme, for example, you would just leave that unticked and it would not be classed as a qualifying scheme. The next one, and this again will be your pension provider who can answer this question, is does it use qualifying earnings for pensionable pay? Yes or no? Of course, if the answer is yes, you'll be ticking this box. And if the answer is no, you'll leave it unticked. And then the last one to focus on for this particular scheme is the salary sacrifice. Is it a salary sacrifice scheme? Again, your provider will be able to give you the answer to that. And again, if it is, simply tick the box. Next, we're going to go and pop into the employee tab. So this is where we'll be setting our employee contributions. Now you'll see here we've got a drop down where you can select a fixed amount or percentage. But as this is our workplace scheme, we're going to leave it at percentage, and we're going to be using the minimum contribution amounts, which is a total of 8% with a minimum of 3% for the employer. What that means is the employees would be left with the remaining 5%. So that's the key when it comes to legislation, is the minimums is a total of 8% and the employer of 3%. So you can have 4 and 4, and that's absolutely fine. As long as the employer has at least 3 and it all adds up to 8, you're good to go. The next tick box to focus on will be this one at the bottom, so deduct before tax. So does this scheme deduct the contributions before or after tax is calculated? And again, it will be your pension provider who will be able to answer that question. And again, like salary sacrifice, like qualifying earnings, if it is deducted before tax, you're ticking the box. If it's deducted after tax, you're leaving that unticked as so. The next one will be employer. So very similar to the employee, except it does not have that deduct before or after tax button. And again, it's just about setting the percentage amount. And last tab is your provider tab. So here is where you would enter the details for your provider. Now this tab is very important for those of you who are using the pension module. So ensuring that you have the correct provider name. So Nest, for example, and the provider's reference in there as well. Once you're happy with all of the settings, then you just have to simply click OK. And that is your pension scheme set up and saved. And as we mentioned earlier, the next part is to assess your employees and then assign the scheme. So I mentioned earlier, pop into the legislation settings. So we're sticking with company in the bottom left and then going to legislation now. And here you'll have a tab at the very top that says automatic enrollment. And here are where all of the thresholds, so the lower and upper thresholds, as well as the earnings triggers. So this is what you would use to manually assess your employees. Once you've done that, we now need to pop into the employee record. So we're going to use employee 10 here. And we're going to go and assign them a scheme. So once we're in the employee record, we're going to go ahead and click on the pensions tab. Now that we're in the pensions tab, we can see here we've got no pension scheme set currently. So I'm going to click on manage schemes. This employee has been in and removed, as you can see here. So let's just delete that as if it never happened. And from a previous demonstration, believe it or not. So we'll now add one. And here we've got our pension scheme settings for the employee individually. So firstly, we need to click on the drop down for scheme reference. And there you'll see a very similar screen, which looks like the pension scheme settings. You can see all the default schemes that are there. And there is our company pension scheme. So we'll go ahead, click OK. The next is to enter a joint scheme date. Now it will automatically default to what your process date is set as. So you can see in the bottom right of my program here that my process date is set as today's date, which is in fact the 7th. Okay, so this can happen in real life. I forgot to change it for the month end of us processing September's pay. Now, if you need to change that date, you of course can. For the purpose of today's demonstration, we are going to leave those dates as the 7th. But again, you would just check with the provider when your active membership was achieved as well, and when in fact they joined the scheme. And that's it. So you'll see there we've got the employee contributions that we set up in the scheme. Now they can be overridden for an individual employee at this level. So if you were to change any of these, the whole scheme does not change, just for this one employee. But we're going to leave it as, because it's just a standard workplace pension, so it's the same for everyone. And make sure that primary scheme box is ticked as well. Then click OK. You'll see there we now have the line back in, which has our pension scheme. The to date is blank because it's active. We're just going to hit close. See now that our primary scheme is there as well. Now, don't worry when you first do this, the contribution show is 0. That's simply because we have not calculated any pay for this employee yet with that pension scheme assigned. So it will come up with 0 to start with. We're now going to hit save and close, and that is it. So that is the scheme assigned to this particular employee. So what we'll do now, let's jump back to our presentation. So that's setting up a scheme and assigning. So there isn't a lot to it when it comes to those schemes and assigning to the employee. So we'll have a look now at opting in and opting out requests. So opting in, employees who are classed as non-eligible or entitled can opt into a pension scheme. Okay, so they can choose, they don't have to be in, but they can choose to be in one. Any employee who's been assessed as non-eligible and who opt in, the employer must contribute. So they would have a standard 5 and 3 as well. So they kind of follow the same rules with that as the eligible employees. So the employer must contribute for those. Any employees who've been assessed as entitled who opt in, the employer can choose to contribute for this one. So they don't have to. So with entitled employees, it can just be an employee only contributing pension scheme if you wish. Okay, so again, totally down to yourself on that one. But that is only for entitled employees where you get the choice as an employer. Now, opting out requests. So any employees who are eligible and have been automatically enrolled can opt out of a pension scheme within 1 month of them being enrolled. Sorry. The employee, however, must request this through the pension provider, so they have to have it in written form. So they can't just speak to you in the hallway and be like, can you just take us out of the pension scheme, please? They have to have it in writing, and it must go through the pension provider. Once it's gone through the pension provider, they will then inform you of this request, and you can go ahead and then process that opting out. And speaking of processing, as I mentioned, we'll do this as a manual basis, but the pension assessment screen, once again, has the options to opt in, opt out, or postpone an employee as well. So you've got the 3 buttons at the top if you're a pension module user. So what I'm going to do now is let's just jump back into our program. we're going to use employee 10 as an example as well. Now, the opting in process manually is the exact same process as you would assigning a scheme. So the one that we just went through, that would be the process to assign that scheme to anyone who's opting in. Now, to opt an employee out manually, again, we're going to pop back to our employee record, jump into our pensions tab. We're going to hit manage schemes again. This time we're going to click edit rather than add. That will bring up the same screen we just saw earlier. And in this instance, we are going to add a leave date as well. So for the purposes of this, we're going to jump ahead in time a little bit. We'll say 2 weeks. They got back to me. And then we're just going to click OK. We get this message. And we get this message because I have not unticked the primary scheme. So if you forget, just like I did there, don't worry, you can just click yes, and it takes them out anyway, so it just unticks it for you. And you'll see there, now we have a company pension scheme with a from and a to date. And then again, if I click close, you'll see that we no longer have a pension scheme set. That record though does sit there, so it does have on record in the program that this employee was a part of a scheme and has in fact been opted out of the scheme. So we'll click save and then close the employee record. And that's it. So that is the opting out process done via a manual basis. Now, when it comes to any refunds owed, if it is within the first month, then what you will need to do is process that through enter payments by setting up a new pay element. Again, though, if you're using the pension module, yep, you guessed it, it does it all for you as well. So we're going to pop back to our presentation now. Okay, so now we're going to jump into the next section, which is calculations. As I mentioned earlier during the contents, calculations are going to be very useful when it comes to troubleshooting any sort of pension amounts or pension contribution queries, whether it be from yourself, a colleague, or an employee themselves. This will help determine whether it's right in the program, how it's right in the program, or whether you need to change a setting or so. So the first things to check before you start your calculation is, does the scheme use qualifying earnings? So remember that tick box when we look through the settings? So we've got a couple of screenshots there if you don't. So the qualifying earnings for pensionable pay tick box, does it use the qualifying earnings? And the next one is the scheme deducted before or after tax. So that was in the employee tab of the pension scheme settings. So again, does it use qualifying earnings for pensionable pay? And is it deducted before or after tax? And these are the two things that you will need to make note of before you start your calculation. Qualifying earnings. So what are these? So when a pension scheme uses qualifying earnings, the pensionable pay is calculated using the upper and lower thresholds. So again, we popped into the legislation, if I can get my words out, legislation settings earlier. You could find these here as well, so the lower and upper thresholds. One thing to be aware of, specifically this tax year, the lower thresholds used to match that of the national insurance thresholds. They no longer do. So the thresholds for upper and lower for automatic enrollment, slightly different now to what they were for the national insurance. That was a good way to remember them last year, but that's not the case this year. So if you're ever unsure, just need to double check, pop into these legislation settings. So we've got a couple of example calculations to run through before we're going to give you a go. So we've got one for you guys to do as well. So firstly, start with the more basic or the easier of the lot. Pension doesn't use qualifying earnings and it's deducted before tax. The employee contribution is 5% and the employer is 3%. The gross pay is £2,000. This employee is being paid £2,000. Because it doesn't use qualifying earnings, the entire £2,000 is the pensionable earnings. And then all you need to do is take the 5% of the 2,000 for the employee contribution and the 3% for the employer contribution, which gives you £160 respectively. So that is the basic one. So that's when it's not using qualifying earnings and it's deducted before tax. Nice and easy. Take the gross pay and get your percentages that way. Next, adds an additional level. So this is where a pension uses qualifying earnings and is deducted before tax. So employee contribution again is 5 and 3 for the employer. And we're going to go with £2,000 for the gross pay once more. So this time, in order to obtain the pensionable earnings, we need to deduct the lower threshold, which is £520 for a monthly employee. So we are going off a monthly basis. So you take your gross pay of 200, deduct 520, that gives you 1,480. And that is now your pensionable earnings. So in order to get your contributions, you take the 5% and the 3% of 1,480, giving you £74 and £44.40 as your contributions. We have another one. And we have, again, same scenario of users qualifying earnings and is deducted before tax. Contributions are the same of 5 and 3%. This time, though, the gross pay is a lot more. So this person is being paid £8,000. Now, the key here is because the gross pay is higher than the upper earnings threshold, anything over the threshold is not classed as pensionable pay. What that in essence means is when a pension scheme uses qualifying earnings, there is a maximum employee contribution amount, which in this case is the amount. So we look at the upper earnings, which is 4,189. So we don't look at the 8,000 because it's over the upper earnings. So we have to then go to the next step, which is looking at the upper earnings level. We deduct the lower earnings like we did last time, which is 520. And that gives us an amount of 3,669. Now, this is your pensionable pay. And when a scheme uses qualifying earnings, this in essence is your maximum pensionable pay. Then again, same as last time, getting the 5% and the 3% of your pensionable earnings, which gives us the contributions of £183.45 and £110.07. So that is when the gross pay is higher than the upper earnings. Now the next one, we have one more change, which includes an additional step in the calculation. Now when the contribution amounts changed to that of 5 and 3%, it did throw off a few people this one just because of the values, and I'll explain in a minute. So this time the pension uses qualifying earnings and is deducted after tax. So it's after tax this time. We're sticking with 5 and 3% as our contributions. Gross pay again is £2,000. So we know that it uses qualifying earnings, so we need to deduct that lower earnings threshold, which is the 520. That gives us our pensionable pay. Now for the employee contribution, we then need to take 5% of 1,480, which gives us the 74 as it did earlier. But because the contribution is being deducted after tax, we then need to deduct that 74 by a further 20%, which is the tax relief. They are in essence missing out because it's being deducted after tax. That 20% does get added on to their entire pension pot, but by their provider. So what they will see on their payslip is £59.20. And that is because of that additional 20% deduction. Now, when the amounts changed, it threw a few people off because 20% of 5% is 1. So the amount looked like 4%. And because that was a round figure, it kind of got a little confusing at times. So we would get a lot of questions about why is my pension employee's contribution only 4% when it should be 5%. The answer, it was being deducted after tax. And it's because of that additional step you see there in green. The employer is not affected by this as they don't pay tax. They pay national insurance, but not tax. So you have the 3% of your standard pensionable earnings. So hopefully that made sense, but that is only for when it is deducted after tax. Do you then need to reduce the employee's contribution amount by a further 20%? So as I mentioned, it's time to get you guys involved, if you'd like to, of course. So we're going to use the questions icon in this that we went through earlier to submit your answers. So we've got the scenario there, and I've put a nice screenshot of the legislation settings just to be very nice and helpful there. So the pension uses qualifying earnings and is deducted before tax. Employee contribution is 5% and the employer is 3%. The employee is monthly. Their gross pay is £1,500. So what are the contributions for an employer and employee? So if you want to pop your answers in the questions, so using that question button and then hitting the blue send, and we'll give you a few minutes to go through and submit your answers. If, of course, you wish to take part, making a bit interactive, and let's see if those calculations have come to fruition. Again, just to save you hunting for it in the program, unless you want to go there and find it yourself, the screenshot of any thresholds, if you think you need to use them, are there on screen should you want them. So we'll cover the question again. Uses qualifying earnings, deducted before tax, and the employee contribution is 5%, and it is 3%. So what are the contributions? A few answers coming through, so thank you for those getting involved. Certainly hope you like the interactivity. We want to try and make these a bit more engaging and a bit more interactive for you guys in future, so always let us know if you like this. We'll give it one more minute and I will reveal the answer. In fact, we'll give it 30 seconds because I'm conscious we've overrun slightly. We do have the answer available on the next one. And I shall go through with it, go through that calculation with you as well. Certainly a shame we can't get a little bit of music to play whilst you do your calculations. Always a bit awkward silence. Never hurt anyone, did it? So. Right, okay, so we will move on now. I can see there are still some answers coming through. So again, thank you so much. But we'll get things moving and I'll reveal to you the answers, which is £49 for the employee contribution, and it is £29.40 for the employer's amount. How did we get to that? Let's bring my calculator up and we shall go through it together. We'll put it full screen, why not? Ignore this. So we knew that the gross pay is £1,500. It uses qualifying earnings, however. They won't make that little so you can see the answers. We know that it uses qualifying earnings, so we need to deduct 520, which gives us a pensionable pay of £980. Now we need to get our contribution amounts. So we want 5%. Again, everyone works out percentages differently. This is how I do it. Which gives us £49 for the employer amount. Now it's deducted before tax, so there's no need to do that additional 20%. And if we take the 980 and then we get the 3% for the employer's amount, we get £29.40. So that is how the calculation is done. Again, as I mentioned, knowing the calculations and what impacts the calculations as well within those settings, very useful for when it comes to troubleshooting contribution amounts. So that wraps up the main body. So we've hit the half-an-hour trigger point there. So what I'd like to do is run through all the available further support that we have on offer, which includes our wonderful Sage Help Center. Now, I promised the guys at the Help Center I would mention this because our wonderful digital assistant, Peg, has in fact had a bit of an upgrade regarding pensions. So do check out Peg, who is our virtual assistant. So you'll see the little icon in the Help Center on the right-hand side. but Peg has gone through some major improvements with being able to talk you through steps. So she doesn't just direct you to an article anymore. She will take you through each step as you go as well. So check out Peg. But in there as well, you can search our knowledge base. So if you, at the end of the session, when we close off, if your question comes to mind, for example, jump onto the Help Center and type the question in the knowledge base, and you can search all of the guides available there. We also have additional webinars. So we do run a webinar every Thursday, usually at 2 o'clock. Of course, it is National Payroll Week, so we've got 3 this week, including our big quiz tomorrow, which is at 3 o'clock with myself and Duncan. So if you'd like to get registered, you can do. Again, head to our Help Center and hit that webinars button that you see in the top right. In there's also videos as well. So embedded in the articles, there are various tutorial videos to help you through things. And last but not least, if you desperately need us, you can get in touch as well. So the contact options haven't disappeared. They are still available in the help option, and that's via our web chat or, of course, our phone lines. Next is something fairly new to talk to you about, which can help as well, and that is Sage membership. So what is Sage membership? Well, it's a combination of 3 things. So you have Sage University, where you've got free access to numerous payroll courses. So head on over to sageu.com and have a look at that. You've got Sage City, so an online forum basis where you can discuss topics, problems, functions of the program with other payroll users from Sage. And then you have our Sage Masterclass as well. There's more information on this slide for you. I'll not run through it because it is quite a lot, but if you are downloading the handout, it is available to you on that as well. So you can have a quick look through, or you can head on over to sage.com/UK/masterclass. And that wraps it up. So we will spend a bit of time for any remaining questions you guys may have. So again, submit them if you haven't already, and I will be back shortly to say our final goodbyes once we know that the questions are done and we got no more coming through, or of course the time runs out. If you are leaving us at this stage, it's been an absolute pleasure to see you all and see so many of you on today's session. Don't forget, when the session comes to an end or you do leave, you'll be presented with a short survey. So it'll be really useful and important to us as well if you spend a little bit of time just filling that in. It helps us improve the webinars, improve features like that interactivity I spoke about earlier, and make these the best they can possibly see. You can also use that to put in any suggestions for topics you would potentially like to see as a webinar in future. So I'm going to put myself on mute now, and I'll be back shortly to say our final goodbyes. Okay, so that pretty much wraps it up. I can see no more questions are coming in. Whilst I go through, don't forget, if you want to have a copy of the Q&A, you will just need to copy and paste that into a Word document whilst I say our final goodbyes and before we close the session. So do that now if you can. In the meantime, again, as I mentioned, it's been an absolute pleasure to see so many people in. I hope you're all having a wonderful time during National Payroll Week, and all your businesses and bosses are all spoiling you rotten for this week that is due to celebrate everyone in payroll. From me and the team, I just want to say one more thank you, and I hope you're all looking after yourselves out there and continuing to stay safe, of course, as well. Don't forget, we've got our big quiz tomorrow. So if you enjoyed the one question that we have numerous questions tomorrow to ask you guys. So head on over and get registered for that. In the meantime, look after yourselves, and hopefully we will see you in the next one. Thanks for watching.